Imagine a time when a single paycheck could support a family. Groceries were bought with cash, and budgeting meant sitting at the kitchen table with a pencil, a notepad, and a stack of envelopes. No apps, no credit scores, no buy now, pay later. Just discipline, routine, and a very clear understanding of what money could and could not do. We're stepping back to explore how families budgeted, how they made their money stretch, and why many of their methods still matter today. In the 1960s, the average American household looked very different from today. Most families had one primary income, typically the husband working full-time. The wife often managed the household finances, groceries, and bill payments. Wages were lower by today's standards, but so were expectations. A new house might cost around $12,000. Monthly rent could be under $100. College tuition was often a few $100s per year. But even with lower costs, money was treated as finite and fragile. Families didn't assume raises, bonuses, or side hustles. They budgeted based on what they had, not what they hoped to earn. In the 1960s, cash ruled nearly every household expense. Paychecks were often cashed at the bank or workplace, and the money was physically divided. If you didn't have the cash, you didn't buy the item. Simple as that. Credit cards existed, but they were rare and used cautiously, often only for emergencies or large purchases. This cash-based system made spending tangible. You could see money leaving your wallet. You could feel when it was running low. That physical connection made overspending harder and budgeting more intuitive. One of the most iconic budgeting tools of the 1960s was the envelope system. At the start of the month, families divided cash into envelopes labeled groceries or rent or mortgage or utilities and gas. Once an envelope was empty, spending in that category stopped. If the grocery envelope ran out before the month ended, meals got simpler. This system forced families to prioritize needs over wants and to plan ahead instead of reacting. Groceries were one of the largest weekly expenses, and they were treated seriously. Meals were planned before shopping. Lists were written by hand and followed closely. Meals were built around seasonal produce and affordable cuts of meat and starches like potatoes. Rice and bread, leftovers were expected, not avoided. Nothing went to waste. Homemade meals weren't a lifestyle trend. They were simply how families survived on a budget. Even with limited income, saving money was mandatory. Families set aside money for emergencies, car repairs, medical expenses, holidays and birthdays. Savings accounts were tracked with physical passbooks, updated at the bank. This mindset came from lived experience. Many adults in the 1960s had lived through the Great Depression or World War II. They understood how quickly income could disappear, and they prepared accordingly. In the 1960s, frugality wasn't embarrassing, it was responsible. Clothes were repaired, not replaced. Shoes were resold. Appliances were fixed instead of upgraded. Children wore hand-me-downs. Entertainment came from board games, radios, and community events. Spending money wasn't about convenience or status, it was about necessity. Modern life is different, but the principles still apply. The 1960s taught us that budgeting works best when it's visible. Spending limits should be real, not flexible. Saving is protection, not punishment. Contentment reduces financial stress. We may use apps instead of envelopes now, but discipline still matters more than technology. Families in the 1960s didn't have financial freedom because they earned more. They had it because they planned better. And in a world of digital money and constant temptation, their simple methods might be exactly what we need again. If you enjoyed this look into the past, don't forget to like, subscribe, and share your own family budgeting stories.